we had news this week about inflation. This is the latest from Fred. I talked about it actually on a video we put out this morning. How do I prep every morning, for my trading? I go to the website and I look at economic data. As I said, I'm a techno fundamentalist. I watch technicals, but I also absolutely have to pay attention to fundamentals of what's happening. Fred stands for Federal Reserve Economic Data. You guys can do this on their website. This is the latest CPI. Well, look at this. Look at this trend going back to, 1940s, right? I mean, this is actually this would be a good stock chart, but this is a trend you don't want. Okay, and all the gray bars, by the way, that you guys can see on the chart is where the economic slowdowns hit or recessions hit. Okay. So my point is, this is not a good chart when it comes to inflation. It's going from the lower left to the upper right. If this was a stock, it would be amazing. So CPI came out on Wednesday. It was lower than expected because we play the expectation game on Wall Street, right? Just like with earnings, we play that game. The expectation is this. It comes lower, market rallies. Expectations is something I will talk about in the future on Power Hour or different videos. This is the consumer price index for all urban consumers, all items in US average, all items, right? But then they have different versions of this. They have core CPI, which excludes food and energy. How many of us don't buy gas and eat food? I'm not sure. They have many ways, right? They can spin it many ways they like. Inflation is hurting people. That's all I know. It's hurting my household, my budget. Everything I have paid for over the last 3-4 years has doubled, right? And has my income doubled? Absolutely not, right? So adjusted to inflation in the United States, incomes are down. And, who's doing that is the last topic. Monopoly money. We keep printing and we keep spending. And this is what the items are in the inflation. Expenditure items are classified in the CPI into more than 200 categories. This is some of the major ones. Food and beverage, obviously, housing, apparel, transportation, medical care, recreation, education, and communication, other goods and services. So in those five, six things that are in the inflation report, let's take a look at it. Food and beverage. Has your food and beverage gone up when you go to the supermarket or Costco? Are you able to buy the same amount of goods with $100 you did 5 years ago? No. Housing. Well, we all know what has happened to housing and rents, up massively. Apparel, that may be actually the only thing that's the saving grace, right? Maybe clothing has not gone up as much. Transportation, has it gone up? Well, take an Uber or a Lyft these days. It has doubled since 2019. Medical care. Hello. Have your bills gone up when you go to the hospital, or God forbid you go to the doctor? Have your copay has gone up? Absolutely. Medical care going through the roof. Recreation. Well, 10 years ago, if you went to Hawaii for a week and you go today, what's the difference? 100% up? Yeah. Education and communication. Okay. Have your phone bills by AT&T or Verizon have gone up? Cell phone bills? Absolutely. How about your cable bills? Have I gone up? Absolutely. Education. Let me not start education because I ranted last week about that. What does a private college like USC or Stanford cost these days to a student? Hundreds of thousands of dollars. Even in the CSU system or UC system, prices have doubled or tripled over the last 5 years. Food, energy, right? Has gas gone up in the US, right? So these are the little things that are in the CPI report, and this is the inflation. You guys can see inflation, consumer prices is the blue bar, and it's pretty clear, right? We had about 2% inflation according to the Fed, of course, since from 90 all the way to 2024. That's 35 years, right? And then we kept printing money. We kept, inflating. And now the cat's out of the bag. And the last one was during COVID, obviously. We printed $5 trillion with a T, okay, to save the economy because nobody was spending money, as I said in a previous video. Our economy went from manufacturing base to consumer spending base. 75% of GDP is consumer spending in this country. And all we do is borrow and spend. That's the only way the consumer is going. But spending crashed, right, during the pandemic, and savings rates went up because government created fiscal policies that put actual cash in people's pockets because they ended up either getting laid off or were sitting at home. Well, that created inflation. Now look what has happened from 1960s to 1990s, 1980s, late 1980s to inflation. It's gone up as high as 12.5%. And inflation, by the way, I talked about this, is a cancer. Okay. You have to kill every single cell. If you cannot, by chemo, which is raising interest rates, if you cannot kill every single cell, inflation will stick around. It's a pesky, pesky, pesky rat. Okay. And that's what the Fed is doing now, raising rates, lowering lowering the balance sheet in order to fight inflation. And their goal is take it back to what it was for 35 years, which is about 2.5%. That's their target. Well, until they do, they're going to keep the interest rates high. All your credit card, interest rates, card loans, everything you guys have noticed, you're paying more interest on those things. And once the inflation trend starts, it's not an easy thing to get rid of it. Okay. It's in the system because of the printing, because of all this money slushing into the economy. You cannot, it's like a washing machine. You cannot even halfway through the washing cycle, open the door and empty the water. You just can't do that because the scale of it is so massive, right? So, yeah, is inflation going to stick around? It looks like it to me.